Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we are going to be talking about Ripple and XRP, as well as the vast majority of crypto and finance. And I figured I would dive in and really kind of just talk about what's happening within the US, because as an investor, as a retail investor, I do not feel protected at all. And in fact, I feel as though they are trying to keep us all in the rat race, which I will address and talk about in this video. So let's start with this. So one, major banks. These are some of the largest banks by market capitalization. These are some of the most well-known banks out there. And these are all plummeting at a rapid pace. Some will say that banks are collapsing what seems like overnight, and the trend is just beginning. This is going to continue and continue and continue. And as I've mentioned, as you actually look at the market cap of some of these giants, they are very, very large. And when you look at the performance year to date, and even 1 year ago, and even a few months ago too, a lot of these are losing massive valuations. But it's also regional banks too. Regional banks are the main ones that are collapsing, like First Republic Bank and Silvergate and so many other ones, as you guys are probably all aware of. Now, combined with this, right, because as individuals' bank accounts are basically getting swallowed up, well, guess what? If you are holding US dollars, if you are saving those US dollars, those precious US dollars, well, you're also losing money. Because the value of the US dollar, since going all the way back to 1635, has plummeted. And it's not just 1635. You can go all the way back to, we'll say, 2000, right? $1.51. Well, today it's basically flatlined at $1. And we already know that it's worth less than $1, technically speaking. But what's crazy is that we haven't even hit hyperinflation yet. When hyperinflation comes, well, guess what? Individuals are going to be swallowed up. Those that are not preparing, those that do not see this happening, right? Or maybe they see it, they just want to ignore it. Well, those are going to be the ones that wish that they would have started to not only prepare, but also diversify outside of the US dollar. To me personally, I don't believe that this is the time that you want to be holding the US dollar. And I've talked about this many times on this channel. But what's crazy to me is that crypto as an asset class has not only established a major ground for being the next evolution of financial instruments as well as technology, but also the ROI on crypto has been very incredible for those that were early enough. And even now recently, as we look at some of the assets within crypto, I believe that we will see extremely strong ROI on some of these utility gems like XRP. But what's crazy about all of this is going all the way back to May of 2014. Brian Cohen actually posted this over on Twitter. And we do see the SEC Office of Education and Advocacy warned you not to invest in Bitcoin at $440. ROI, if held to today, would have been 6,569%. Do you feel educated? And check this out. Investor alert: Bitcoin and other virtual currency related investments, they're seen as a risk. There's a lot of potential risk around them. And the way that they really kind of word a lot of this is to scare off investors. If you were talking to somebody and you were, saying, hey, would you want to invest in my business? Okay, maybe you're starting a business, or maybe you already have a business and you want individuals to invest in it. And you're telling them, hey, you can invest in my business, but just know it's extremely risky. Or maybe you have other individuals calling it a Ponzi, a fraud, because that's what's happening. We have the SEC calling crypto extremely risky, that, there's a lot of risk posed within it. But then you have traditional financial market platforms like CNBC with Squawk Box, or even just outlets, right? CNBC themselves, the Wall Street Journal, Forbes, etc. Like, they are all coming out of the woodwork and saying crypto's one big fraud. It's a scam. It's a Ponzi scheme. What's insane to me is that, we call crypto, the next frontier of technology, while traditional financial giants are calling it a Ponzi. What's insane is that, what about banks? Because it seems as though banks are now Ponzi's as well. They are losing a ton of value, what seems like I said, overnight. or the US dollar continuously losing value. I mean, what really is a Ponzi at this point? Because I don't understand their terminology. Because, well, if you're going to call crypto a Ponzi, or if you're going to call crypto volatile, then surely you have to call banking stocks volatile. And banking stocks, like these, to me personally, look like a Ponzi scheme, right? But no, that will never come out. They want to keep you from investing in this asset class. It's the number one reason why regulators are going after this asset class. I've talked about this. I said it, like, you know, what's insane to me is if you take a step back and you actually realize why regulators are going after crypto, why they're trying to fight back against crypto, it really puts you in an incredible perspective, because then you understand why, just why it is extremely crucial to be this early in this asset class. This technology will not only just disrupt everyday life, it will ultimately reshape and restructure the entire world of finance and many other industries as well. This is why I say, like, these are the types of things that you really need to avoid. Mainstream attention around crypto, because most of it is all a big scam to keep you out and keep you in the rat race. What do I mean, right? Well, it's very simple. Let's go over to this tweet here from Wendy O. So we do see the USA passes a bill to increase debt to $1.5 trillion. Absolutely incredible. By the way, they want to print another $18 trillion within the next 7 years. But then accredited investor requirements may change from 1 million in assets to 10 million. That has been a subject that I've been talking about for quite some time. This has been a thing that the SEC wanted to bring into this space as well. They said, what they want to put on crypto is a requirement to have only those that have $10 million to be able to invest. Do you know how many individuals that will shake out of crypto? I will say majority of them, because not everyone has $10 million just sitting around. Also, those with good credit may subsidize those with bad for mortgage payments. Your public servants literally hate you and want you to stay in poverty. And this is the truth. What's crazy is that as we really kind of look at what has happened so far around regulatory action, the Coinbase news was incredible to see. Because one, we have seen major updates around this. Jeremy Hogan, Attorney Jeremy 1 over on Twitter, posted this. There's just no way to reconcile allowing Coinbase to sell shares of stocks to the public and then turn around 2 years later and say the sales are all unlawful. That's not investor protection. It's a regulatory rug pull. And yes, this is exactly what they want to do. They want to create this entire narrative that it's so uncertain around crypto. There's no clarity, even though they say come in and register. There's no transparency as well. And it's all because they want to continue to rug pull the general public. They want to come in at the best times to screw you over. XRP is a perfect example. There was $15 billion worth of damages done on day one of the lawsuit. But what has really happened with XRP over the last couple years is incredible, to say the least. I've said it time and time again on this channel. If you go back to the initial lawsuit, here you have it, right? I circled it. So these candles previous to the lawsuit announcement was, to me, the start of something very interesting. Whether or not XRP would have went to $10, it does not matter. All we know is that XRP would have went much higher than the anticipated $2 that we hit. It would have most likely have created a new all-time high and went much higher than, $3, $4, $5. But with this, I have a side-by-side comparison with Ethereum. So here we have the beginning of XRP's run. Ethereum started as well. But the thing is, that's very interesting about all of this is that on this candle here, which really ignited Ethereum to go parabolic, was the announcement of the lawsuit with XRP. From this point on, Ethereum went on to create a massive run in the market. It went up 590% initially, but then finished out the year going all the way up about 672%. Now, I'm not saying that we would have repeated the 627% run up that Ethereum did, but even if we were on par with that, we would have hit around roughly like $6, $5 and like 80 some cents on XRP. Wouldn't that have been incredible to see? Even if we went off of this sell-off candle here to 627%, we still would have had the all-time high being surpassed almost. We still would have hit around like roughly $3.30. I think that we would have went much higher, technically speaking, because even though we were in the lawsuit, even though XRP was delisted from major platforms, we still continued to do a 10.5x. So if we did a 10.5x from this candle here, which would have been absolutely incredible, we would have hit around like roughly $5, which is fine with me. I think $5 for anyone that is an XRP holder, they would have appreciated that. But what's insane is the damage that was done to XRP and the XRP holders, because we were the ones that suffered the most during 2021 because of this lawsuit. And I do believe that it was in benefit for Ethereum holders, because when we see that candle brewing on XRP back here, this was about to take the market by storm and surpass Ethereum like it has done many times in the past. But guess what? The lawsuit came in at the perfect time, right before 2021's massive run up, and caused a ton of damage. But it was to protect investors, right? Nonsense. Also, the SEC's recent crackdown on staking is a perfect insight on the motive that the SEC is taking. They do not give a single care about you or your investment strategies or your protection around investments. They care about cutting you off from the source. They don't want you creating financial freedom from crypto. Staking is such a massive opportunity for individuals to not only earn on their crypto, but it's also a great revenue stream for crypto exchanges, as you do see here. I'm actually surprised that Wall Street Journal even wrote this article. But the thing is that from here on out, we've seen major exchanges being targeted. It wasn't just Kraken, which yes, Kraken did get forced to close down their staking as a service program in the US. But also, guess what else? Uphold had to shut down their staking as a service in the US. And then also the SEC went after Coinbase and warned Coinbase of the enforcement over its staking rewards products. Now, this is what ignited that major pushback with Coinbase suing the SEC, actually. And this is also why everyone is complaining around crypto. And we do see from Gary Gensler, this is from CNBC, SEC's Gary Gensler on Kraken staking settlement. Other crypto platforms basically show the same exact signs. That's what he's saying. And his big quote is that it's easy to register a line of digital code existing inside software. There's a form on the SEC website, apparently, which we all know is nonsense. There's no form on the website. There's no transparency. There's no clarity. The SEC is lying. They are constantly lying. To me personally, as we really kind of look at what is happening around this entire space, there is so much corruption happening in the US. I think that the FTX situation was a perfect sign of this as well. And in fact, Johnny Deaton spoke out about this over on Twitter. We do see money buys you access to government officials. Why do you think the biggest fraudster of them all, Sam Bankman-Fried, was able to have multiple meetings with the SEC Gov, including 2 personal meetings with Gary Gensler? Why wouldn't Gensler meet with Brian Armstrong instead? It's because of the money play. Listen, a lot of these individuals are getting paid off. Gary Gensler is worth over $100+ million. Do you honestly think that he got that wealth by investing and earning money and working for it? Absolutely not. These individuals are getting payoffs from every sort of, I mean, like you could look at criminal, you could look at Ponzi scheme. They are all getting paid off. And at what cost? Well, it's the cost of US investors. Because what we have seen since day one with the SEC has been nothing but individuals getting screwed over. And it's not just recent. Like I said, going all the way back to that initial tweet, going back to May of 2014, and you could probably even go back further before 2014 as well. The SEC has kept individuals out of this space. They have tried to keep as many out as possible. They don't want you getting wealthy. They want you to stay poor. That's their goal. That's their overall goal. They don't want you creating financial freedom. They want to keep you in the banks. They want your bank accounts, right, to get swept up in a collapse just like 2008. That is already brewing. It's nearly here. We are seeing banks collapsing left and right, and we see the Fed continuously raising rates. We know that inflation is brewing. They keep telling us all these nonsense numbers. The CPI report doesn't even include basic utilities that individuals are utilizing daily. It's like all falsified numbers, and it's all to keep you in this sort of calm narrative. Don't panic, don't panic, don't pull your money out of the banks. You know why they don't want you pulling your money out of the banks? Because whatever dollar amount you have in your bank account today, it's not even there. It's not your money. The banks own that money. It's like keeping your crypto on an exchange. It's not your keys, it's not your crypto, and it's the same exact thing with banks. The money that's in those bank accounts, it's not really there. It's just numbers on a screen. Those banks own that money as well. And when they need it, they will take from you. A lot of people think I'm crazy for saying that, but the FDIC has allowed for bail-ins to be a thing. And once they need that money to bail in a bank, or we'll say bail in a billionaire, because again, they always go after the wealthy first, then go after those that are, lower income and whatever. Yeah, that's right. They're going to utilize your funds because they're not your funds. That's why these banks, they are the biggest scam. Banking, the traditional world of finance, is all one big fraud. It's a Ponzi scheme. It's not crypto. Although they want to say crypto's one big Ponzi scheme, it's a one big scam. And don't get me wrong, yeah, there's scams in this market. There's Ponzi schemes in this market, but there's also incredible opportunities that individuals can take advantage of. But we won't be able to under the SEC because they continue to screw the retail sector over. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because of more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. So it's up to you all. Have a beautiful day or a beautiful night wherever you guys are on this before. This has been Nick. Peace out, guys.